There's a few things that are hated. Oil and gas is still hated. It's treated me beautifully for 5 decades. Some years good, some years bad, the last year bad. But it's a wonderful, wonderful, wonderful business. And these businesses, the public businesses, the better ones, are selling at half what they're worth. Will they recognize it in 2025 or 2026? I don't know. I don't have any idea. But I do know that if I buy them now and I hold them for 5 years, I'm going to have a really, really, really good 5 years. If you want a gamier suggestion, I really like the high quality rare earth space. Nobody understands it. Nobody cares. There are probably 50 pretenders in the rare earths, but there are, 2 or 3 speculations that while you could easily lose 30% of your money, you could also easily enjoy 20 baggers. And I sort of like that. I'm impressed with the moves that we've seen in the gold bull market. Gold bull markets follow a predictable pattern. The gold goes first, the best of the best goes next. We're in that third inning, if you will. You've seen the Francos, the Wheatons, the Agnicos double in 18 months. What happens after this is that momentum attracts people to the whole sector, and you have valuation arbitrages. The best of the rest gets cheap compared to the best of the best, and either value arbitrageurs like me move down the quality trail, or the best of the best take over the best of the rest. And then it proceeds on down the trail. This gold bull market is following an extremely predictable pattern. It's happened 3 times before. And there's opportunity for our attendees to understand where the gold market's going to go and stay ahead of the curve, which is very, very attractive. At some point in time, you and I have talked about this before, when generalist investor capital gets attracted to the precious metal space because of the momentum in gold, silver starts to move. Silver begins to outperform gold. I don't know when it's going to happen. And I think I told you this before. When it happens, you won't need Rick Rule to tell you it's happening. It'll be really, really, really dramatic. At some point in time, the high quality, small silver stocks, more likely than not, are going to rip. Absolutely rip. So we've had a reasonable collection of those here at the conference. And we've told people what to look for, how to buy them, and to be patient. When I look at the copper market and I look at the oil and gas market, the softness in energy prices, even as production plateaus, tells me that the economy on a global basis is weaker than we expect. Platinum and palladium are economically sensitive. So and I'm not an economist, as you know, I'm a pawnbroker. If the economy continues to deteriorate, likely that softness will extend to the internal combustion engine sales, car sales, and that could impact platinum and palladium prices. Looking longer term, platinum and palladium are likely still selling below the total cost of production. And there are still substantial supply risks. If you think about it, platinum and palladium come from 2 places, really, South Africa and Russia. Neither of those places politically are garden spots. Russia is at war, which is difficult. South Africa has ongoing social challenges that haven't yet really manifest themselves, but I suspect will. In the South African mining industry, first of all, the South African government keeps making noises about nationalizing the mine or increasing the social take. What that means is that the mining companies won't make substantial capital investments in the mines because they don't know who's going to own them. And that means that they substitute labor, cheap labor, for capital. They don't invest in capital equipment for the labor to operate. They don't invest in training. And that means that the laborers aren't getting paid enough money to live. The workers' wages have to go up, but the workers' wages can't go up. Because I don't know how that resolves itself, I don't have the courage to buy those. Perhaps the best expression of that would be the shares of Ivanhoe mines, which have been decimated because of their stability problems in Congo. They are bringing on a new mechanized mine in South Africa with 80 million ounces in reserves and resources. So perhaps the best way to express a preference in platinum and palladium, other than the Sprott product or Bravo, would be in the shares of Ivanhoe mines. My top ASX story is a rare earth story. It's meteoric. Lots could go wrong, and nobody should buy it until they get their financing done. They need to raise 30 or 40 million bucks. That needs to happen. Get that out of the way. What I like about meteoric is, first of all, rare earths aren't particularly attractive to Australian participants or anywhere else, so it's deeply out of favor. The asset's not an Australian asset, so Australian investors aren't focused on it. And it's an Australian domiciled company, so North American investors aren't focused on it, which is to say it's way off the radar screen. And as I told you, I love hate, if not boredom. So it meets that. It's a deposit with, I believe, at least $20 billion in situ reserves and resources, which is a tier one deposit. It would be, were it constructed, at least according to the pre-production studies, in the best quartile worldwide in terms of all-in sustaining costs and in the best quartile worldwide in terms of return on capital, which I love. It's in Brazil, which relative to the countries I invest in is ironically pretty stable. And it's in a good part of Brazil. It's in a part of Brazil that has roads, power, workers, water, all that kind of stuff. It will be at least a 5-year development time frame. So anybody who buys it has to be patient. Bottom line on this, I could easily lose half my money. Easily. And there's going to be lots of volatility, and it's going to go up and down and up and down. But it is a stock that I think, if things go right, could give me a 10-to-1 return or a 20-to-1 return or a 30-to-1 return. I love tier one deposits in out-of-favor commodity. I also like an ASX stock called Sovereign, which is a rutile and graphite developer in Malawi. Those are also commodities that are off the radar screen. Nobody cares about them. Again, ASX listed. Australians don't like it because it's not in Australia. North Americans don't like it because it's domiciled in Australia. Nobody cares about graphite. Very few people can spell rutile. And again, it's an enormous deposit. The third ASX junior I like is Centaurus, which is also in Brazil. And it's in the nickel business. And people hate nickel. They've gotten pounded in nickel. I believe it's the best undeveloped sulfide nickel deposit in the world. So those would be my three ASX. Deeply, deeply, deeply off the radar screen. There's an exhibitor here called Emerald Resources, which I've held for a very long time. I have a huge position in Emerald. Would I enter it in a big way today? Probably not. But I have huge built-in gains. These are people who built Regis Resources, which was one of the most successful Australian stories in the last decade. They're people I've known and done business with for 30 years. Buy and build strategy, superb guys. So that's something that people could take a look at if they're not as fond of hate as I am.